Could we start the session?
I'm sure. Please, ma'am.
Yeah, Venkat, can you change this to gallery view? Yeah, thanks. So, good afternoon, everyone. I welcome you all to today's webinar on green market achievements and way forward. As we all are aware, power plays a very important role in our everyday life and also to the economic growth of the country. As we become, I think, more aware of the impact on the of power on the environment from the power sector, the importance of renewable energy sources, is more increasing, and these sources have a much bigger impact on the environment. So I'm sure today's awareness program on green term ahead market mechanism would help to facilitate the achievements of the renewable energy capacity in our country. So I'm really looking forward to the session, and I request our president, Mr. Ramakant Inani, to kindly deliver the welcome address.
Thank you, Ms. Kathy. On behalf of Federation of Telangana Chambers of Commerce and Industry, I welcome Mr. Nitin Sabiki, Vice President, Business Development of Indian Energy Exchange, Mr. Sushil Sancheti, Chair, Power and Renewable Energy Committee of FTCCI, Mr. Uppaluri Srinivas Venu, Co-Chair, Power and Renewable Energy Committee of FTCCI, co-chairs, members of Power and Renewable Energy Committee, Management Committee members, past presidents, and participants. Good afternoon. The India's power sector has attained a unique level of development in the newly developed, established open electricity market, increased private sector participation in generation capacity, extension of transmission and distribution network. Management of renewable energy has improved the mechanism of Indian power system in multiple ways. The Central Electricity Regulatory Commission has come out with a strategy to create a market for green energy and approved trading of renewable energy contracts and a green term ahead market, that is GTEM. As a first step towards environment-friendly power market, the Ministry of Power and New and Renewable Energy (MNRE) has initiated Pan-India Green Term Ahead Market in electricity. The trading platform offered by the exchanges are providing many futures contract on this GTEM. The initiative will provide consumers a sustainable choice and help government to achieve its renewable energy goal and enable integration of renewable energy in the most flexible and efficient way. Today's webinar aims to build an understanding on green term ahead market and new market segment future contract, etc., with a detailed presentation by our speaker. I hope this session would give a thoughtful awareness on green market for energy. Thank you.
Thank you, Mr. Inani. I now invite the chair of the Power and Renewable Energy Committee, Mr. Sushil Sancheti, to kindly deliver the introductory remarks.
Yeah, thank you, Kathy Madam. Thank you, Ramakant Inani. I welcome my co-chairs, Mr. Srinivas Uppaluri, and other co-chairs and all other participants. I also welcome Mr. Nitin Sabiki, Vice President IEX, who will be delivering the address. Thank you so much. As we all know, energy is a critical tool input for any manufacturing and the industry. Without energy, you can't do much. Green energy is a new development, a new thing which has come on the exchange, which allows those people who are in for sustainable power to buy that green energy or sell green energy as they, if it's a buyer or a seller on IEX, which is a welcome development and which would go long ahead in the market and the years to come. Now, I would just like to introduce you to give the profile of Mr. Nitin Sabiki, Vice President IEX. Mr. Nitin Sabiki has about 14 years of work experience in power sector and marketing. He has been associated with IEX from last 11 years as a part of foundation team of IEX. He has been looking after the business development and for the electricity, REC, and ESEC markets at IEX. Mr. Sabiki is an IT graduate and has done his PGDBA marketing from Symbiosis Pune. He's also done his MBA power management from University of Petroleum and Energy Studies. He is visiting faculty to MDI Gurgaon, IIT Kanpur, NPTI Faridabad, Thapar University, Patiala, Great Lake University, Gurgaon, University of Petroleum and Energy Studies, Dehradun. What his area of expertise includes is power markets, power exchange models, techno-commercial aspects, power exchange operations in India, renewable energy certificates, open access, energy certificates, energy saving certificates, and electricity futures. He is also actively involved in papers like open access model for India, writing various technical papers, new product developments, developing of optimization models for discoms, tie up with international power exchanges and key player in power markets. He also looks after the communication and positioning activities IEX. Earlier, he has worked with the TPDDL, Tata Power Delhi Distribution, which was a consortium between a Tata Power and Delhi government as in a consumer care group and developed training modules. He's also worked with CRM services and as a member of core training member for Chase Manhattan Bank, a US-based bank for over 2 years. So without taking much more time, I would like to hand over to Mr. Nitin Sabiki for his speech and introducing us to the green markets, the way ahead markets. Thank you, Mr. Nitin. Please welcome.
Thank you very much, sir. I think thanks for having me here. I think it's rightly timed we're having this discussion. That's the right thing to do. Knowing the fact that we're at the key juncture where things will move more towards the renewables, as we have seen. So green market that I'll talk about today, I think the idea was started almost 5-6 years back. At IEX, we proposed to CRC the contract in form of we started the idea of how do you put it? We started the idea of having this green day-ahead market. It was turned out by the regulator on multiple grounds that the market may not be ready. Whether we have that much understanding among the stakeholders, whether they need this kind of markets or not. But again, that didn't stop us. We went ahead and again addressed certain issues, and then we refiled with a different market segment, which is green term-ahead market. And now we see that after a lot of effort, we got the approval. Now, there's a lot that we'll discuss today. But again, I would be more than happy to address any specific concerns, query after the presentation. I think that's what would be the most interesting point. So I'll share with you what exchange is, again, just for the larger interest. So Tamil, FAPCA has been we have been working very actively, and other association, we have been working very actively in southern states and all across the country. We have been very actively working. The whole point of having this interaction is also to share with you what are the key trends. I think that is it. So I'll quickly share my screen. Just allow me a moment. You have to allow me to share my screen if the admin can allow us. I'll be able to do that.
Venkat, can you do it?
Yes, sir. Yes, you can share now, sir.
I can share it now. Thank you very much. I hope it is visible, right?
Yes, sir.
Thank you. I'll quickly minimize the screen so that. All right. Yep. So moving on. We will talk about the green market, but just a quick snapshot about the exchange in general. So we were started in 2008 for electricity only segment, and so far we have got around 95% market share in the segment. See, again, people often judge the market based on prices, volume, But honestly speaking, if there's something which should be considered for judging or evaluating, assessing the competitiveness of the market, it is not the price. It is certainly not the volume. It is the participants. Because volume is a function, or price is a function of demand and supply. So the more diverse the market has, the participation, most competitive. I'm using the word competitive. I'm not saying a good price, because there is no definition of a price which can qualify the price as good or bad price. Because, for example, a 3 rupees could be a good price for a buyer, may not be a good price for a seller, and vice versa. So if the market has to offer a price, it is the yardstick is how competitive that price is, and that competitiveness of the price of the market depends on how many participants are there in the market. So the exchange we started in 2008, and this was the first exchange which started trading in day-ahead market, the REC market, the eCerts market, and the GTAM markets. These 4 segments we started as the market leader. Now, when we started day-ahead market, we built on liquidity. So slowly and gradually the liquidity picked up. We built on participation base. However, all the additional segments of the market segment that we introduced, they were actually getting the advantage of a liquidity or the participation base, critical mass, already developed. So we were not looking, when we introduced real-time market, we were not going in the market for new participants. So for any product that we offer to the market, we are actually not looking at the new entrants, new market participants. All the existing participants we already have with us, they are good to participate in these segments. You'll be happy to learn that IX, we have got more than 6,000 plus participants. This is by far the highest for any electricity energy exchange in the world. None of the exchanges have this much participation. So we have got more than 4,000 industries, commercial establishment, almost every distribution company, conventional generators. We have got more than 1,500 RE participants also. Now, the focus of today's discussion is on the green market. We'll spend time on that, maybe slightly more on why it is needed. But it is also imperative to understand what all products a market offers. So as I mentioned, 2008, we started this market. Just give me a sec. Yeah. So 2008, we started this market. We started with day-ahead market. So day-ahead market is double-sided closed auction where both buyer and seller are submitting their bid, and the auction is run and the price is discovered. So day-ahead market, what does mean? The market for next day. Then we have intraday market. It was made round the clock available. Intraday market means there's a market which provides power for the same day, which means today I'm trading on Thursday. If I want to buy and sell for Thursday's requirement, it would be intraday. However, if I want to buy and sell for Friday's requirement, it would be day-ahead market. And for Friday's requirement, next day requirement, there's another product called day-ahead contingency. The only difference is day-ahead contingency starts when day-ahead market is closed. So today on Thursday, I'll have got 2 windows, 2 contracts or products available for Friday's delivery and 1 for Thursday's delivery. That's the product that I have as a participant. However, there are longer duration contracts also available. If I want to get into slightly longer, let's say a week-long contract, I can also do that under weekly segment. However, we do not offer anything more than 11 days at this point of time. Going forward, there will be products which we will be introducing for a longer horizon, where you can actually do a transaction for a month or maybe quarter or year or so. So those are the products that we'll be offering in the electricity only segment. So far, we have not heard of anything in the renewable space. In 2011, we started with renewable energy certificates, RECs market. Most of the industries must be aware of this market segment. So RECs are this certificate-based trading where buyers are buying certificates and the generators, RE generators are getting certificates based on their generation, and the buyers are buying to meet their obligation. Then we had energy saving certificate, which is again linked to perform, achieve, and trade scheme. First cycle was traded in 2007. 2021, we expect to have trading in PAT cycle 2. Few of your industries will also be designated consumers, depending on the situation, whether you're buying or selling. Then during the pandemic, we did two really wonderful things for the market. We introduced on June 20 the real-time market, where you can actually trade power just 1 hour in advance. I think it's such a beautiful thing uh, for a consumer as well as for a generator to able to buy and sell just 1 hour in advance, depending on my requirement. And on August 21, we introduced green term market, which we'll develop on in the due course of time. So these are the market where intraday, DSC, daily, and weekly contracts were traded. So these are the four segments we'll discuss about in detail. And before I move to the real part of this thing, it's also important that we also talk about what led to the requirement of having this market. Now, so again, what I'm about to say is my personal views with respect to markets and everything. So India has set a very aggressive target of renewable addition. We are talking about 40% of RE energy by 2030. In terms of energy term, 40% would be renewable energy. 450 gigawatt of installed RE capacity. So it's a massive number we are talking about. And we have seen consumer preferences also shifting towards green energy. So there's a lot of traction these renewable generations getting. Now, why this market is required? Because you have got very optimistic, aggressive target. And it is important to know that wherever in the world, I'm sharing a very important piece of information with you. You look at the history of any developed country where they have high RE integrated into the system. All the countries, till the time they were around 5 or 10%, they were having these conventional approaches, feed-in tariff or certificate RECs mechanism, RPM mechanism. All those nations which has renewable of more than 10% in the energy mix, not in the capacity mix, energy mix, all those nations you'll find that they have some market-linked product in the kitty, which means they have these buyers and sellers who are entering into more market-linked product, contract for difference, feed-in premium tariff. There are multiple things which are linked to market for a competitive price discovery. So far in Indian scenario, the renewable addition that has happened so far till now, it is more linked with I think it's a more of a preferential treatment or a subsidized treatment to renewable sector, where you're giving a lot of waivers, exemptions. It can go well until and unless it is not impacting the system as a whole. But what happens is, as long as renewable was slow, it was less in the total mix, which say let's say about 3-4%, 2-3%. It was not impacting anyone. However, whenever this share of renewable in a specific state crosses more than 10-15%, in some time of the day 20-25%, that is the point, and still getting preferential treatment, that is where the problem actually comes into picture. So I think that by the design of the whole scheme, markets will be inevitable. Whether somebody would like or not, next phase of renewable addition will happen with the help of markets only. Now let's understand what all options as a buyer or seller I have when I have these RE options. So let's stick to the bundle mechanism where I can buy renewable power. First is feed-in tariff, maybe a distribution company buying from a generator, now which is now replaced with competitive bidding, where the auctions mechanism are there in the picture. SECI, NTPC are running those auctions. Even the states are calling their tender, and we are seeing a declining price trend in that segment. And then we have captive third party, which many of the consumers are using for their renewable purchase obligation, and also to get certain benefits which are extended to captive renewable generator. And then also this is the market that we introduced, green term and market. We'll talk about it in the next slide. And there are other products like GDAM and others, green day-ahead market, and other products which exchange will offer will be in the bundle mechanism, will be offered to all the participants. But this is the first product in the bundle mechanism. Otherwise, unbundled mechanism, you have day-ahead market, term-ahead market, real-time market, captive third party. What unbundled means? It means where the electricity and the green attribute are traded separately or dealt with separately. So as a consumer, You might be buying power in day-ahead market or any of these models, but for our obligation, you're buying RECs. So plus these are the products that are offered at this point of time. Going forward, we might offer new products. Then is the contract for difference. Again, this is a very it's a good concept commonly used in other part of the world where they try to address the problem and they try to link everything in the market. This is a case. Let's assume a scenario that there's a distribution company or a consumer who wants to buy green attribute, but does not want to make sure that it should not have a must-run status obligation there. So if I'm a consumer or a distribution company, but I don't need power at this point of time, because renewable is a must-run, it should not be scheduled to me. So there are certain instances where the discoms are actually giving curtailment to renewable players. They're not getting the payments in time. Distribution companies are supposed to operate renewable as a must-run. Operational constraints are there for them to operate. So contract for difference provides a very beautiful solution for that, where there's an agreement between a buyer and seller, which says that a buyer says, I will like to commit 3 rupees for your power. Now, I'm not scheduling your power. You go and sell in the market. Whatever under recovery you will have, for example, you're able to recover 2 rupees 60 paisa from the market. Our understanding was for 3 rupees. I will make 40 paisa payment to you. I'm not scheduling your power. I'm not consuming your power. I'm making payment of 40 rupees to you. I'll make payment of 40 paisa to you for your green attribute, because you generated renewable power, but you sold your electricity in the electricity only market. Balance whatever the revenue gap is there, I'll fill in. But again, the generator is happy because he is getting payments in time from the exchange, not linked to the buyer's capability or the financial conditions. Part of the payment I'm getting immediately. The actual buyer has to pay only the differential part. So there's a lot which was discussed about it. I think going forward, you will see something on these lines also in the tenders to follow. Now, just a quick word about, I think this I can skip how the exchange have grown. It's shown a very positive growth. But look at this number. All these countries with high renewable, Nordic countries are around 70%, 30% is California, UK, Germany is more 30%, more than 30%. You'll find everywhere the exchange share in the total mix is around in the range of 40 to 80%. So again, high renewable, high exchange. In our case, we're at 4%. So there's a lot of scope for the exchange market to develop going forward, and it has to develop if you want to have more and more renewable into the system. Now, let's understand the benefit of green market. I tried to cover that in my initial part, but just to rephrase it. So for buyer, you're getting the most competitive price. There is no long-term rigid commitment. There's a flexibility and transparency in your procurement, and you're getting electricity plus you're meeting your obligations also. So buyers, it works well for buyer with these options. On the sell side, if you look at now, who can be the sellers? Distribution companies who have surplus power can sell, or renewable generators. On the buy side, also distribution companies who wants to meet their RPO or the industrial consumers can also buy from the market. Now, sellers, if you look at, it gives them additional avenue to sell beside their long-term arrangement. It will give a price signal which will help some merchant capacity to come up. You have an access to a pan-India market. If I'm selling on a PPA-based mechanism, I might be selling to a state-specific thing, but when I come to market, it's a national level market. There's a certainty in dispatch. I know if I'm selling in the market, if I'm getting cleared, I will be getting dispatch from the market. Then, of course, we have a real-time market where I can do the imbalance. So if I'm not able to, generate more, I'm allowed to buy from the market also in case of outages. Sellers, discoms, if they want to sell all the renewable discoms like AP, Telangana, Karnataka from southern region, they can very well sell their surplus in the market, because what happens is it's not the problem of having surplus renewable. It is to integrate this renewable into the system. If you are consuming this power, you need to operate your existing other resources, conventional resources in a very it gets very difficult to manage those resources. However, if you're able to sell off your renewable power in the market, you're able to better balance the other resources in your portfolio. And the most important benefit is the payment guarantee. I'm sorry, if you're selling in the exchange, the payments are guaranteed and the counterparty risk is taken care by the exchange. So we are the one who are guaranteeing the payments to you. Now, so there are 4 products that we have introduced: intraday, DAC, day-ahead contingency, daily and weekly. Just to quickly go through the contract specification, how it pans out. So intraday is for the 15-minute same day delivery. It's for the same day. DAC also 15-minute, but for the next day. So the trading can be done for 15-minute time block wise. And intraday is the same day delivery, DAC, next day delivery. Then we have 2 contracts, which is daily and weekly. In these contract, trading is done for a day. For a daily contract, you have an option to trade for multiple days. For that day itself, day in totality will be traded. You're not doing time block wise trading. You're saying, I want to do a weekly contract, means for calendar week, Monday to Sunday. This is what my power I want to sell. So it happens in a megawatt hour term. Basically, how it is calculated. As a seller will be quoting, let's say he's doing a weekly contract. How is quoting in the system? He's saying solar generator, morning 6 till evening 6. For each time block, this is my megawatt. So he'll plot megawatt. Morning I'll have 1 megawatt. By 9 I have 10 megawatt. By noon I will have 50 megawatt. Will further go down to 30 at 3 o'clock, and then by 6 it would be 0. So there's a profile in megawatt. It is bidded by the generator. Now, if you add all these megawatt on 50-minute time block basis, if you consolidate, it becomes megawatt hours. So for that, for example, it becomes 100 megawatt hours in a day. So if I'm doing a weekly contract, the understanding is generator is saying, I am willing to sell 100 megawatt hours for 7 days. In totality, I am selling 700 megawatt hours. The buyer who is buying these 700 megawatt hours, they can go in the system and see, okay, fine, this is a profile. This is a solar profile. It's selling 100 megawatt hours and for that matter, 7 days and getting power. If it is a daily contract, it may happen that I might be selling for Monday, Wednesday, Tuesday, Thursday, and Sunday. This is my, for these days I want to sell. So you can trade from T+2 to T+11. So the point here is, if I'm doing that kind of trading, I can choose which day I want to trade. And the buyer knows if I'm buying from Monday, this is the profile. If I'm buying for Friday, this is the profile. So depending on if you think my profile can be different on different days or based on my forecast, you can participate in daily contracts. Otherwise, you can sell in weekly contracts also. So all these markets are operational at this point of time. We started with intraday and DAC, and early this last month, we introduced this daily and weekly contract into the system. Now, trading is continuous trading. Now, what is continuous trading? We will talk about it subsequently, how the matching happens. Continuous trading technically means both buyer and seller submitting their bid. It's like equity share trading. You can see what others are quoting. You have no idea who that entity is, but you see somebody is willing to sell 10 megawatt at, let's say, 10 megawatt at let's say 3.5 rupees. That's a bid. So if you want to buy, you can match that price and it would be scheduled to you. In a weekly or an auction, which is an auction-based mechanism, you're collecting the bids and then you're discovering the price of after all the accumulation has been done. So trading, if you can just quickly look at the trading on intraday, DAC happens every day. Daily also will happen every day. Weekly, Wednesday, Thursday, and Friday. So Wednesday, Thursday, Friday, you can trade a weekly contract means which is for the next day. Trading hours, intraday happens for 0:15 to 19:30. This is a trading time. Why it is restricted from 00:15 to 19:30? Because to schedule power in intraday or DAC, we need 3.5 hour time from the trading till the delivery. So 3.5 hours is the gate closure by the regulation. So that is the reason the last contract, which is starting at 11 to 12, will be closed at 19:30, 7:30. So we'll be closing this contract almost 4.5 or 3.5 hours in advance, just to make sure that we have got clear 3.5 hours to dispatch this power. For daily, the trading happens every day from 9 to 1700 hours. Weekly, the trading happens on Wednesday, Thursday, Friday on 12 to 1700 hours. Delivery hours in intraday, you will get power for 20 hours from 4 to 24. These hours, DSC you'll get for all 24 hours. Daily and weekly, you'll be getting daily based on the profile. Whatever the profile that has been offered will be given to you. Minimum volume that somebody can bid is 0.22 megawatt. Now, why 0.22 megawatt? We initially thought it would be 1 megawatt, but it just happened that we got the comments from the stakeholders that it has to be reduced to 0.22 megawatt. Honestly speaking, I don't have the answer why 0.22, why 0.2, why not 0.20. But there was certain submission by the developers that it should be minimum 0.22 megawatt. Maybe something to do with the generation profile of a solar generation. Now, if you remember, I mentioned very clearly that we are the counterparty to all the trades. So how do I guarantee payments to the sellers? If somebody is selling in the market, how do I guarantee payments to them? It's a very simple process. I have a risk management system in place where I take money in advance from the buyers. So I have enough margin to collect it from the buyers. So I take money in advance from the buyers, and after the delivery, I make payments to the seller. If you look subsequently, yeah. So if, in case of intraday trading is happening today. So paying is T+1, which means I will ask buyers to pay on next day. So today is Thursday. If you trade in an intraday market, I will ask you to make, let's say you have traded power for 30 lakh rupees. So this 30 lakh will be demanded from you tomorrow, because we cannot just have real-time collection. So it would be demanded from you tomorrow. We'll be making payments to the seller on tomorrow itself, on Friday. However, to let you bid, we already had a margin of 105%. So you had this balance in your account with us, or maybe through your member. This was there with us, 105% of your bid value. So if you're bidding, let's say your bid value was 50 lakh rupees. So 50 lakh is with us. It may so happen that the real trade which happened was 30 lakh. So this 30 lakh will take from you tomorrow, and then this 50 lakh will be released. The margin will be released, but at any given point of time, exchange is not exposed. So if you look at this data, it's a weekly contract. The payment happens D-1, 1 day before the delivery, and the payout to the seller happens on D+1, 1 day after the delivery. So at any point of time, exchange is not exposed. All your trades are secure with the robust risk management that we have. So far, we have not allowed any volume variation. That's one thing which people were saying that it should be there because it's a renewable power. You cannot schedule it on a firm basis. You should allow some kind of a leeway to these players who wanted to sell in the market. So as of now, we propose initially that some kind of flexibility, but I think it was the initial days for renewable markets. Maybe depending on more feedback, comments from the stakeholders, going forward, revision may also be allowed. But at this point of time, it is not allowed. So this is again just the detailing of how these contracts work. What are the product that has been offered in the system? As I mentioned, open auction or continuous trading. Let's focus on the continuous trading because that's where the maximum trading is happening. So how a continuous trading process works. So let me explain you whatever we are seeing right now. Again, it depends on if you want to do it yourself. You have to become a member of the exchange, or maybe most of you would already be registered with the exchange through one of the members. The same market can be accessed through that credentials also. You can continue to be client to your existing member and they can trade on your behalf the way they're doing electricity trading. Now, there is anonymity in terms of who is bidding, but the price and volumes are seen by the system. So there's a buy bid of 10 megawatt at 4,500 rupees, and that becomes the best buy order in the system. So the best buy order will be shown on the top. There's a sell order at 5,500 rupees. When this is the screen, there is no matching happening. No trade is happening at this point of time because buyer at 4,500, seller at 5,500, no trade will happen. What happens is there's another buyer at 5,000 rupees. Now this is interesting. Somebody else quoting 5,000 rupees. Now just look at the change. Earlier 4,500 was at top. Now 5,000 rupees bid is at the top. 4,500 is still in the system, but he is not the best buyer. Best buyer is one who is willing to pay more. So 5,000 becomes the best buyer. Now this seller, 5,500 seller, he revises the bid. He says, I want to revise my bid. The bid is modified from 5,500 to 5,000. 15 megawatt is quoted. Out of this 15 megawatt, 10 megawatt will be matched at 5,000 because there's a counter buyer available. What happens? 10 megawatt is scheduled in the system and out of the system. Match hua and it is out of the system. Now, after this trade is executed, what is the scenario in the system? 4,500 is the buyer now, and 5,000 rupees, 5 megawatt. So this is a pending uncleared 5 megawatt of the same seller. He quoted 15, the buyer was of 10, match, balance quantity is there. It is still visible if this buyer wants to increase bid to 5,000, it will be matched with this seller. So it is again a competition which is there. It's a very competitive market, because as a matter of fact that if I'm not, he was thinking that he can wait and he can negotiate with the seller online by keeping a lower price, but somebody else sees the opportunity and took away that power. So that's how typical continuous trading works. But let's understand how intraday and DSC contract works. So as I mentioned, intraday market, the trading hours is this. It starts from 00:15 to 19:30, and there's a 3.5 hour gap. So this is the delivery period. From 5th hour to 24 hours, the trading can happen for each 15-minute time block. So if you want to trade power for 5th hour, and it's not necessary that you have to buy all 4 time blocks. No, you can say that I want to buy for 1st and 4th time block. Possible, you can do that. The trading is happening on hourly, on 50-minute time block. Bidding is happening on 50-minute time block basis. However, in case of the DAC, the delivery period is complete 24 hours. You get all 96 time blocks if you want to trade. The trading window for you is, as I mentioned here, 1,500 to 2,300. So 1,500 to 2,300 hours is the trading window for a DAC contract. Again, a weekly contract, if you look at, as I mentioned, it happens on Wednesday, Thursday, Friday. So if it is Wednesday, Thursday, and Friday, this week can be traded. 8, 9, from this particular week. Any of these days can be traded. But in case of daily contract, how it works, let's assume it is Monday. So it is T plus 2. If I'm bidding on Monday, I can trade for 3rd to 12th. I'm not saying bundle together. You can trade for 3rd, 4th, 5th, 6th, 7th, all these 10 days, you can do trading. All these 10 days you can do trading in totality, or if you want to do any of these days, all or any of these days you can do trading. So if on Monday I decide I want to trade for 4th, 6th, and 9th, you can do that. However, as the day passes by, if it is Tuesday, Wednesday will not be available because the delivery starts from T plus 2 from Thursday to Sunday. So it keeps on rolling on the basis of the bidding. Now the critical point for this market is that this market provides a very important aspect, which is if you're participating in this market, you will be meeting your RPO compliances through the market. So if you're buying from the market, you get electricity plus you get a certificate from the exchange stating this is the renewable power you have met, and it's a sacrosanct document for you to meet your RPO obligation. I asked my team to pull out some performance snapshot numbers till December. So from 21st of August till 23rd of December, this is the kind of volume we have seen. We've got almost 900 MUs of buy and almost 1,300 MUs of sell, and we have cleared 536 MUs. Trust me, whenever we were thinking that we'll start with this market, whether we'll be able to do 500 MUs in just 3 months of time, nobody would have given us that shot, to be honest, maybe. But again, it's just that, the belief is you create the market, because you never know from where the liquidity will come. It may so happen that market sometimes creates its own liquidity. There's a price signal. There was a buyer initially, then there was a seller. First seller on day one, we had only one seller who was selling. What happened during that duration is that one seller, there was some incidental surplus he wanted to sell. The price signal went to the participant, then the surplus discom started selling, and that's how the trade executed. So the average is for this period is around till since inception is 368. Minimum is 282. Maximum is 450. Generator, we have got 10 generators with us, and on the discom side, 15 discoms are buying, 2 discoms are selling. Karnataka and Telangana. Consumer, we have got 15 consumers from almost every region. There's some representation on the consumer. Trading has happened. This is a very important achievement. Trading happened on each single day since inception. So that shows the kind of confidence market participant has. Now, if I just quickly look at how the participation profile pans out, so as I mentioned, 15 discoms and almost 15 industries. So these are top 5. So Haryana Discom, CSC, Tata Power, DVC, and BRPL. They are among the top 5 buyers. Maximum buy volume in a day that we have got is 29 MUs, and the top 5 discom trades almost 78% total cleared volume. So again, it is still discom heavy. It was bound to be because discoms are the one who has a much higher compliance obligation. On the sell side, if you look at, so there are a lot of 2 discom and almost 7 generators who have been actively selling. 430 MUs have been sold by Telangana. 52 MUs been PCKL, and there are other small little IPPs who are able to sell this kind of power. But the point here is the number may look small to start with, but given the scenario that you do not have any merchant capacity in the country, given the scenario that nobody is setting up any additional capacity for market, still we are able to do these kind of trades and start giving price signals. So what is the role of an exchange? When we started electricity market in 2008, that time also there was no surplus capacity. Everything was tied up under PPA. There was hardly any trades taking place. But the moment exchange started giving price signal, that is where the competitiveness came into picture. People started evaluating, assessing is as one another option. Some set up merchant capacity, some became more efficient to make sure that they have some surplus capacity on account of efficiency. Sold in the market, buy when the sell is high, buy is less, price is low. Buy more, sell, buy less, sell, buy more, sell low. The price is on a lower side, a higher side. So again, demand supply keeps pulling and pushing the price up and down. It's just that more and more participation came into the picture, and we had more competitive prices. This is, I think, day-wise data. I think they've been able to pull out how it has panned out. So blue are the non-solar, and solar is the orange one bars. And if you look at the prices which has been there, so orange are the solar prices. The gray one is the day-ahead market, conventional electricity market price. There is a difference, but still there's a trend, similar trend to how this market pans out. Now, the most beautiful thing is, if you look at this scenario, we know REC trading is in abeyance because of Aptel not being able to give the final judgment. Till that time it happens, we will not have any clarity on that. So the trading is in abeyance till then. Solar, we know as a matter of fact, we don't have much inventory. And the benefit is, in case of solar, even if you want to quote a higher price, the maximum price, which is technically 1 rupee, if I'm quoting 1 rupee for solar REC, which is 1,000 rupees for solar REC, I'm getting partial clearance, which means I might be bidding 500 RECs, but I'm only getting clearance of 50, only 10%. Because there's a lot of demand. The supply is less than the demand. However, somebody buying this, the advantage is they're just getting it. If I can just quickly see what the price difference is. Let's say in this case, the rate was 3 rupees and they got it at 3,500. 500 rupees I'm paying and I'm getting my compliance met in totality. I'm getting whatever has been I bid, I get the clearance from the market. So if somebody is for solar, if you're paying 1,000 rupees, still not getting completely cleared, this market could be very useful, where you just, even if you pay 1 rupee, if 1,000 rupees more than the day-ahead price, or 1,100 rupees also, it is still a decent case for you, because you know that if I'm getting it, I'm meeting my obligation. There's no proportionate clearance in this segment. Of course, to conclude, there's a lot which can be done for market deepening. We are already doing a lot of advocacy, maybe through your association. We would also like to have those kind of representation, where, see, the idea of the first point is that we want to add renewable in the country. Currently, there's a waiver of transmission losses charges on the renewable generator, that will not be applicable on ISTS, all the renewable plants. The idea is, whether I'm setting up for a long-term PPA or DISCOM, as long as I'm renewable plant, I should have that exemption, so that I'm allowed to sell in whatever market or mode I want to sell. So it should not be confined to one thing, because then the market participants, it's actually at a back foot. People want to do it, but this may act as a deterrent. And we also wanted that going forward, there's a lot of scope for renewable generator to become more of a, you've seen that round the clock tendering has happened, where the firm delivery will be ensured. We are proposing that generators should be allowed to buy from the market in order to meet their compliances. So for example, you as an industry, I'm a renewable generator. I go back to you and tell you that I can offer you power on round the clock basis. And let's say hypothetically 3 rupees 50 paise, I'm happy to supply you power. And whatever I'll supply, 50% or 60% will be green. That is my guarantee to you. And 40% would be conventional power. But you will get round the clock supply, don't worry. It is my responsibility. Now the role of a generator has changed from just a supplier. Now I'm more of an aggregator. To supply you 10 megawatt, I have to say, okay, fine, what is my renewable portfolio? So if I have a 10 megawatt solar, or maybe then I know, as a matter of fact, okay, fine, I can supply 10 maximum. But in the daytime when I will be generating 5, I might have to do some alternate arrangement. I might have some wind in my kitty, or I can go in the market and buy for you. But I'm offering a fixed price tariff for you. So, but I'm buying from some thermal generator, I'm buying from some market. But as a renewable generator, if you allow this kind of flexibility, lot more products will come for the market, for the participants. Otherwise, if you confine it to only PPA based regime, or maybe some preferential treatment to attract intrastate captives, that may serve the purpose for a short term, but you will never be able to meet. That's my take. You will never be able to meet your long-term goals, which you have set. Again, there are differential on the policy side also. There are differential policy framework with respect to RPO compliance and other thing. And we want this RECs to become more dynamic. That is a generator. It is either I'm REC project or I'm not REC project. What we are saying is, if you are a renewable generator, I should have the flexibility that, okay, fine, today on Monday, if I'm selling in green market, I will not get RECs. But on Tuesday, if I sell in electricity only market, or day-ahead market, or let's say RTM market, real-time market, I only sold my electricity. For Tuesday generation, I should get my RECs. So I think this flexibility, I think I'll be happy, Srini. I think we have discussed multiple times. Maybe through this forum also, if you think there's some representation which could be, and of course there's no conflict with your members, which I don't see any. These could be certain intervention and representation can be made for a efficient integration of renewable in the system. That's again long and short from my side. Happy to take questions, queries, concerns, feedbacks, suggestions. That's it. Thank you from my side.
Yeah, thank you very much, Nitin. Thanks to Enlighten, the IEX platform, especially the power exchange. So I think in a very simplistic way to just do a comparison, it is very much compared to the kind of trading what we do, the stock exchange kind of a stuff, the buy sell kind of stuff. So, on a very similar means, the power is, getting traded here. I think a very important and very useful tool, though, in the recent times. And this June 2020, MOP has also introduced the real-time market scenario. I think that's something which is really encouraging these days in this particular sector. And certainly, FAPSI in and around Telangana, we have a lot of, MSME-based organizations, SME-based organizations, and there are certain power salvy companies, who certainly look for 24/7 kind of opportunities in this particular space. And as you also rightly pointed out, that 24/7 is something which is becoming more popular these days. And we see a lot of SECI, NTPC tenders coming in this particular direction. And there's a lot of promotion which is happening on the RTC based. And for sure, the C&I, means the consumer and the industry segment, would certainly see, the daylight in terms of, the energy market becoming more ease. So I just have one question as of now, which is, popping on this chat, on this chat box. One from my colleague, Mr. Mansoor Ahmed. For beginners in this trade, can you please suggest any useful resources for trading?
Again, just to, so that I answer it in the right manner. So can you just maybe, Mr. Ahmed, if you can help me with understanding what kind of resources are we talking about? Is it more on the capacity side that you would like to understand markets more, or is it more on the infrastructure side, IT tool to build the system? Maybe I'll answer that question accordingly.
Yeah, to the way I understand, the way I read this is, maybe say, for example, Nitin, if I am a beginner, I do not know anything about this market,
yep,
and would like to just start off with, so what is that? Maybe, if he can actually be a small time generator to an exchange, or if he has a factory, he can actually purchase from the exchange and use it for his peak requirements or whatever it is. I think something of of that sort. I think he might. I think he's looking.
So again, thanks Shini for clarifying. Again, of course. So again, first and foremost, let's understand it's not at all a very complex thing to do. Okay, the market runs on the price expectancy of both buyers and sellers. You as an industry, or you as a generator, everybody has their own threshold. So for example, I'm an industry. Okay, I can afford to pay 5 rupees for open access power, maybe procurement from the market. For renewable, if I want to buy, I can pay up to 5 rupees. That's, again, don't take numbers for reference purpose. It is just for the illustration. However, adjacent to you is another factory who cannot pay more than 4.5 rupees. So their threshold becomes 4.5 rupees. So his acceptability or go to market price is 4.5 maximum. On the other hand, there's a seller also. So everybody will have their own threshold, and these thresholds are known to you. Nobody else in the system knows better than you. So what I need to do is need to identify my threshold, and then need to evaluate. Okay, fine. If this is my threshold, can I do some day-ahead market procurement? If I'm an industry, I'll procure some quantum in day-ahead market, plus I'll buy RECs. Or does that make sense to buy green market at one go? Why wait for RECs? Because RECs anyways is not getting traded at this point of time. I may or may not get it if there is shortage of RECs. I'm getting firm power. So for example, if your obligation is 10%, let's understand, and you have a load of 10 megawatt. So what ideally I should do? I should keep on buying, let's say 9 megawatt in electricity segment and 1 megawatt in GTAM. Ideal mix. What I'm doing by doing this, I'm meeting my RPO also, because my RPO is not for 10 megawatt. It is for 1 megawatt. It's only 10% of my open access purchase. I can do this, or what I can do, I can trade for 3 months, and for good 10 days I can buy GTAM complete quantum. So there could be multiple combinations. I can also buy RECs. So the problem, I won't say problem, it's the issue would be you would have multiple options to choose from. So do I need any kind of intelligence it's again very plain mathematics. I know, the threshold, what my electricity break-even rate is. I will not buy anything more than that, plus how much I'm willing to pay for my green attribute, obligation RPO. If you add that, let's say it is 1 rupee. So DAM break-even rate plus this becomes my break-even rate for electricity GTAM market. That is the rate I should be quoting in the market. And to trade, of course, smaller industries, they do not trade directly. So you're trading through one of the members. So bidding on the exchange, how to bid, I think that is their call. They are bidding on your behalf, submitting your bid, but that information flow happens through you. If you're a direct member of the exchange, you yourself can enter in GTAM market 5 megawatt, 3.5 rupees. But if you're trading to somebody else, you're telling him that you want to buy at this price. So with respect to resources, I think it does not require a lot of it's not a rocket science to understand. It's basic internal calculation, which anyways our team helps. I'm not sure whether Aditya is there or not on this call. He was earlier coordinating for this meeting, I believe. But again, we have our office based out of Hyderabad. Aditya is there, and also Ravi Gucci, who sits in Hyderabad. He looks after our southern region. I'll in the chat window, I'm just dropping his email ID also so that we can always connect to him. I'm sending my email ID just for the reference. Anyways, I'll be sharing the presentation with you for more details.
Yeah, thanks, Nitin. Is there any other question, to the members and to the participants?
Hello.
Yeah.
Sir, this is Vivek Joshi. Hello.
Yeah. Go ahead, sir.
Can I buy the power and store it for some one year or 2 years, and then again sell it when there is a demand for it?
Very
long-term contract.
I got it, sir. Very. So again, so there are two angles to it, sir, if I understood your question correctly. So one is you're buying right now to sell at a later stage. We call it as it's getting into it's more like a futures contract trading. Where you're buying today and taking position now and then selling. It's not a purely it's a more of a derivative contract, which very soon will start in the Indian market. There's one judgment which is pending from Supreme Court, and then we'll be good to start these kind of derivative contracts also. However, this is something where you would like to have you're acting as a more of a speculator. This is what it's more of a speculator role, that you're buying today, that after 1 year, I'm getting power today, after 1 year at 4 rupees. You said, no, the rate would be on a lower side. Let me buy today and then I'll sell at that point of time. So you can take those positions. The market design allows you to do that once the futures market will be in place. As of now, it is not. It is purely delivery-based market. The second aspect of a longer duration procurement could be that today, as a buyer only, I would like to firm up my requirement. I'm not buying to sell at a later stage. That's not my intention. My intention is to commit for a longer horizon. I don't want to do this daily trading. Every day I don't want to do trading. Aap mujhe batao if I can get 10 megawatt for 6 months. So as of now, as I mentioned, there is a jurisdiction issue that I just referred to. Once that is clarified, it would be very soon. At exchange, the contracts which are currently confined to 11 days will be opened up for almost a yearly contract. So you can do trading for up to 1 year, maybe monthly, quarterly, weekly, whatever you want to do. You will be in a position to do that through the exchange platform. I hope that answers the question.
Yeah. How much is the amount required for minimum amount required for trading?
So amount with respect to second, it depends on the contract type. So if it is intraday or DSE contract, and if you're buying, let's say 100 units at 3 rupees, then the 100% money has to be given. Okay. But if it is a longer horizon contract, then some part will be taken, some percentage will be taken from you in advance. And then on regular basis, we'll be asking you to make payments. So it's not 100% upfront payment that you have to make. But again, what you have to pay, let's understand what all charges I have to pay. If I'm buying from the market, there would be the cost of the electricity plus the network charges, open access charges if there are any applicable, and exchange fee of 2 paisa. So these are the 4-5 charges which are known to you in advance, and that precisely is the amount that you have to pay. But for every state, the number would be different. Every state, the number would be different actually.
So in case if I want to take the membership, what is the procedure for that?
Okay, so membership comes, there are multiple ways of taking the membership. First is when you say membership, there are 2 ways of trading in the exchange. One, you become direct member and you do the trading yourself. That's is the membership, where you will be logging in, you will be bidding. So that membership, there are multiple options. There's one light payment option, which spans out to almost 22 lakh rupees. And then there is a full payment option also. But again, it depends on the size of the transaction that you're doing. So if your size is, let's say, more than 40-50 megawatt of requirement, then maybe direct membership may be viable. Otherwise, you can just pay 1 lakh rupees for becoming a client of the exchange, and the member will be doing trading on your behalf.
Mr. Srinivas, can I ask a question?
Yeah, please, sir.
Yeah, Mr. Nitin, just little away from the green markets, the exchange is a best tool to discover the prices and what's, it's very dynamic. But what we see is many discoms creating obstacles or hurdles in terms of, the entities who would like to buy, in terms of cross subsidy surcharge, additional subsidy surcharge, some non-tariff barriers, so many things. What is your view on this? Do you think this would change in time to come? And how are the discoms of other states taking this up compared to Telangana? What we see here, there are a lot of issues with regard to the open access.
Your point, sir, that of course there have been some amount of resistance, and open access in general is not been promoted by the utilities. Now the point here is, it is actually the right of a consumer. So it's not something, a favor that you have been asking. But of course, Discom have their own concerns. And the point here is that we understand there are open access charges. There has to be rationality in what you're charging. We're not saying that should be zero, but there has to be a rationality. If you're charging an additional surcharge, there has to be a rationale for charging that. And if there's a cross-subsidy surcharge, there has to be a rationale to charge that. And of course, there are procedural things, Sometimes the barriers are tariff-based, which I just mentioned. Sometimes non-tariff, maybe clearances, permissions, and all those things. So you're much better aware than us. But again, that's what the situation on the ground is. And it can only be addressed if we highlight it at the right forum at the right time. So at IEX, I think we believe we've been doing a lot with respect to joining hand with associations and making representation to the policymakers. And again, I would urge, we're already working with your team, sir, with the association on multiple front. Open access, one such area. I think a few months back we did one event. So I think there's a lot of knowledge building has been done about the best practices done by other states. And so again, see, the idea is we cannot say that what they're doing is completely wrong, but the point is that you do the right thing. So in the right manner. So we understand there has to be charges to be implied, but those charges should not be so irrational that suddenly the viability goes away. So the intent should not be to make it unviable. The intent is to make sure that you are getting what you are supposed to get. Okay. Customer always had that choice. Just imagine a scenario. Can you say somebody that if you're into a specific area, you will only get supply from Airtel and not from Vodafone? Can you do that? Or you'll only have landline connectivity of BSNL? We can't do that. There used to be an era like that, but we have moved on and we have seen the advantage it gives to the participant. So I think it's more about right. It's just that electricity still is not considered as a commodity. It is still more of a, it's more of a social good. So I think that's where the problem lies. But again, we have been working, sir. I think whether for green or otherwise for open access, we have been addressing this on multiple forums. We will continue to do that with you also, sir.
Thank you. Hopefully it should come forward
Hello.
and come soon. Thank you so much. Yeah, Mr.
Hello.
Venu, please. Yeah, Mr. Srinivas Venu, please.
Hello.
Yeah, Mr. Joshi,
Hello.
you're saying something, please.
Yeah, sir. Here I see only 4 to 5 states which are participating in the trading or contracts, which is daily or daily basis and all.
Yep.
But suppose if I start trading and if I don't get any, there is no liquidity in the system,
Yes, sir.
then I may sell at a low price.
So let's understand, sir, what all option do I have at this point of time? Let's try to assess this from that angle. That's more important. So again, I'm assuming you're a generator. You want to sell in the market, and you have a break-even rate. Okay. So if my question to you would be, are you registered under REC? No, it's a untied capacity, right? Mr. Joshi, well, this is important. What is the status of my project will identify. So for the sake of clarification, let me say, you're not getting any RECs. This is the project which is not under PPA. It's a renewable project. So you say that, okay, fine, I would like to sell in this market. Okay, depending on scheduling and forecasting the information I'm getting. So the ideal approach would be that I might not be selling everything in GTAM. How would I mix it? That because it's an informed generation, I would rather sell some part in GTAM market, and the balance I will send in the real-time market. Now, the real-time market, people will say, if you're not able to sell in GTAM market, does not mean the story is over for you. For any reason, if the liquidity is not there in GTAM market, you have other contracts available at your disposal where you can sell the electricity only market. So you can actually sell your electricity power in the electricity only market. You would love to sell in GTAM because that is where you will get the premium for green attribute. Let's say I'll get 3 rupees 70 paisa, 3 rupees 80 paisa. But if I'm not able to do that for any reason, liquidity is not there, what you will do, you can always go back and sell your electricity in the market, which is currently operating at 270, 280, depending on what time of the day we are talking about. So you always have a fallback option. It's not that if not done here, then you're done and dusted. You cannot do anything. But the point is, if there is a sell available, let's say you're quoting at 360, it is not getting cleared, but that this is visible to the buyers. That someday, every day, somebody is coming at 360. And the moment the exchange rate is around 280, 290, people will say, rather buy that power. So they'll buy that power, green power. So again, that is how liquidity gets built in. Initial days, liquidity is a constraint. We are not denying that. So today also, whatever sell comes, not exactly the same amount of buy comes. And today, the sell is less than the buy. Earlier, the sell was more than the buy. So it keeps on changing on the scenario. But again, the more time we give to the market, the more volume liquidity will accumulate, and we'll have more and more trades in the system.
Yeah, thank you, Nitin. I think, in case if there are no further questions, so firstly, I think a very detailed, insights about the IEX visibility, especially the exchange platform in the space. I'm pretty sure that the participants have a few queries in this direction. Maybe I would request Sadhana to collect all these questions and maybe just send it across to you, and then you can address them in detail, either through a email or through a phone or whatever it is, like whichever is convenient. So yeah, I think just to summarize, the market has opened up in a with greater visibility in the recent past, especially the trading platform. Besides whatever we have, the regular the rooftops or the ground mount projects, or the captive based projects, which are also becoming more prominent these days. And I was also acknowledging that Telangana state has also restarted the net metering concept. They have tweaked a bit on the policy, and they have recently released even this. So having said that, I would certainly see that, especially the state of Telangana would certainly see a lot of changes coming ahead in this energy space. Why? Because recently they have also announced that they'll be rolling out the e-mobility policy. So I think the vehicle to grid and grid to vehicle, like these concepts, the grid stability plays a very important role. And the open access criteria, we're also trying to see how we can get this open access much more relaxed for the renewable energy. Because when I still remember that when we were working on certain occasions, Delhi and Rajasthan, they could give some levy in this direction, at least for the next 5 years, in the grid banking as well as in the open access, by not holding any organization to a minimum 1 megawatt kind of a load demand. So it can be less than a megawatt. I'm pretty sure that these things would much open up going forward, and exchange would also become more, I would say, user friendly kind of a thing. So every organization, during your off peak, how you best control your power. I think these are one of the potential ways to increase our bottom line, especially in our balance sheets. So during the peak time, how effectively we can purchase the energy, and also meet the renewable energy obligations. It's not just only for certain industries who have pledged, but also for the discoms. There's certain RPO obligations what they need to fulfill. So for sure, I think the next 1.5 year, this power sector would be very encouraging, very booming, and very aptly getting this program done at this given point really makes a lot of sense. And once again, thank you very much, Nitin, to respond so fast in a very shorter time. And I'm pretty sure that all our members were, they have really enjoyed a lot of questions also. So I'm pretty sure that we'll have much programs going forward. Thank you very much once again for your for your presence here, and have a nice weekend. A happy Christmas and advanced New Year wishes to you and to your family, and to the entire IEX family. Thank you very much.
So Srini, I've already mailed you the presentation. Maybe we can share with the presentation.
Yeah. I'll just circulate to the members. Yeah. Thank you very much.
Thank you, everybody. Happy Christmas and Happy New Year to everybody. Thank you so much.
Thank you very much, sir.
Thank you.
Thank you. Happy Christmas to all.
Thank you, madam. Thanks.
Thank you.
Thanks. Bye.
Thank you, sir. Thank you so much.